What a difference a week makes. Thank you all for joining. This is an interesting Q&A because we had some breaking news during the week. And it's so funny to see how the temperature changes around the types of questions people ask. So today is a lot about how to protect your wealth, mastering the art of wealth protection, a little bit about Bitcoin game theory, the games that market makers play, which explains exactly how BlackRock can go 3 days without buying or selling one Bitcoin. And it might disappoint many and may scare many off, but it's just how markets work. But we'll dig into that. What else? Bull market expectations, where we are, where we're going, where we've come from. Dictator-proofing your money. And we'll look at a thing called Helium and 24/7 pros and cons and a bunch more stuff. So thank you all for being here. And I left my key. I've got to get my key. Give me 1 second. Forget it. I've got to go upstairs and get it. Anyway, disclaimer, I've got to do this with a keyboard now. All the questions come from Patreon. This is edutainment. And let's jump as usual. I won't waste your time. Nothing but alpha per minute. First question is from Crypto Neo. When game theory kicks in and Bitcoin price rises to very high levels, many investors would be reluctant to buy Bitcoin anymore. Will this result in investors opting to buy gold instead of digital gold? Well, it's funny because this question actually triggered one of the questions that comes later regarding market makers. And if you think you don't trust Bitcoin market makers, wow, think about gold. I think old gold is toast. It's not going to go anywhere, but let me show you some data points that should give you some pause. First of all, look at this stock. This is called Berkshire Hathaway, and it's gone from very low numbers of dollars to about 60,692. They've never done a stock split, and this does not stop people from buying this actual stock itself. So the fact that an asset can go up to this level, it's actually coincidental. I should have put a chart together mapping Berkshire to Bitcoin to see which one outperforms. We know which one outperforms, of course, is Bitcoin. But having that pair chart would have been super interesting. I forgot to do it. Anyway, that is the model. By the way, some people ask what that red is. That is bear markets in the past. And you can see what happens during bear markets. In fact, Berkshire went up in a bear market. What year is that? In the 2000s. It actually went up when most things were going down. Anyway, that's what the red shadow is. It's part of the ATR model, which I use all the time. Now, let's talk about another factor too. Yes, Bitcoin is expensive. In fact, Bitcoin is 63,800 today. Since my video yesterday, it's gone up $800. Not bad. I always say it goes up at the weekends. And we have 36 hours to go before Hong Kong comes in. Let's see how much they buy. I will try analyze that as best I can. And I think it could be a pleasant surprise. Remember, it only takes $28 million a day to buy the total new issuance of Bitcoin, which is nothing. Anyway, so when we talk about Satoshis, they are 1/100 millionth of a Bitcoin. And that's the way the world is going to go. So right now, the amount of Satoshis per US dollar is 1,558, give or take a couple of Satoshis. But in the world coming forward, we're going to start thinking in terms of Satoshis. So this is a cool little website here out of, I think it's the United Kingdom, because they have a thing called jam, which in the US I think is called jelly. So at Tesco's, you can get seedless raspberry jam for 2,280 sats or $1.44. Probably about £1.20 or something. And for those who like wine, your Del Diablo Rosé, 75 centiliters, is $9.38 or 14,871 sats. But as Bitcoin goes up, as fiat goes down, this will become much less. And soon, I reckon, you'll be able to buy a bottle of wine for maybe a couple of hundred sats, not 14,000 of them. So that's the way the world is going. So no, I do not think as game theory goes on, Bitcoin will evolve. And it's also incredible how there was so much foresight in how they built this protocol. around Satoshis, etc. 21 million Bitcoin is not enough to go around. That's why I always say, if you're a whole coiner, hold on. It's important to be that way. Now, next is from Ross H. Do the market makers have the power to hold Bitcoin and thus the wider crypto market in a certain price range until such a time they decide to let it run? If so, why and how exactly are they doing it? It is widely believed the 2020-21 bull market was heavily manipulated. Is this one going to be similar? Well, Ross H., I congratulate you. You've got your tinfoil hat well attached, and only the paranoid survive, like me and you. So yes, there's lots of funny games happening, and yes, the 2021 cycle was completely manipulated from beginning to end. And I'm going to spend a little bit of time on this because it is complex to understand the guts of how market makers work, and we'll break it all down. So bear with me, because it is a complex step-by-step process, and I'll get to the answer as to what can happen afterwards. So first of all, if you look at this, I'll start at the beginning. Market makers, their job is to help buyers and sellers trade smoothly. In this case, it's ETF shares. And they do keep some shares in inventory to make sure there's enough liquidity. Liquidity is very, very important in all markets. And new Bitcoins only enter and leave an ETF when there's a big enough difference between supply and demand. And when this happens, the market makers will create or redeem creation units. And these are large blocks of ETF shares that can be exchanged for one Bitcoin. Now, if the demand is much higher than supply, the market makers will create new units. And if the supply is higher than demand, they will redeem the units. And this is how all ETFs work, not just Bitcoin ETFs. And many ETFs have zero flows or outflows every day. And consistent, flows will tell you exactly what's happening over time. Now, there is something super interesting. For 3 days, there was like $1 billion of volume worth, and not one Bitcoin was added or deleted. And that tells you, something is definitely wrong there. So where is this buffer? What's actually happening? And when the ETFs first launched, I did say at the beginning that whole T+1, T+2, sometimes even T+3 exposes the whole situation to a lot of fraud. And I always said as well, you would see the ETF selling shares during the day for maybe, call it $44 a share for ETF, and the Bitcoin price would be, say, at $50,000. Then it would fall after the market closed, and that's probably when the market makers would buy. So let's explain this as well. The second phase. So, are you telling me that the market maker can take in money and buy Bitcoin and hold it for themselves, not immediately convert it? So yes, that's exactly what it means. The role of the market maker in an ETF is to, again, ensure the ETF closely tracks the value of its underlying asset, in this case Bitcoin, and they do this by continuously buying and selling the ETF shares and the underlying asset. But as I mentioned before, when there's high demand, things can change. And what they can do is they can take in dollars for the shares, and then they can use that. If they don't have enough inventory, they can buy Bitcoin in their inventory. And conversely, when there's low demand, the market maker will sell the ETF shares. But by holding Bitcoin in their inventory when they don't have to constantly buy and sell Bitcoin in the market is their edge. So yes, the market maker can take in money from the ETF investors, and they can use it to buy Bitcoin, and they can hold that Bitcoin in inventory to facilitate smooth trading of the ETF shares. Okay, so an image of what this looks like. There's no way $3 billion of IBIT was traded over the last 3 days, and there was zero addition or deletion to the fund. And that's because the market maker is the buffer zone. All right. They can buy and sell Bitcoin probably when they want within the regulations and the rules. And this means they can make a ton of money. So people think, oh, how do the poor ETFs make money at only 25 basis points in fees? This is how. This is how. So these fellas here, excuse the AI graphic. I tried to describe something that happens. But yes, the ETF market maker can hodl their Bitcoin in a position where it's not necessarily in the ETFs per se. And it's just weird. I mean, you can see live on blockchain exactly what should happen. If you trade on Jupiter, people can watch wallets and see who's buying, who's selling exactly in real time. It's beyond me why the ETFs don't operate in this way when we have the technology. But if it was that way, there's no way for the market makers to make as much money. Again, the volatility of Bitcoin is crazy. Like just today alone, for example, the range of Bitcoin, we were down at 62.7 and now we're 63.850. That's over $1,000 swing in only a matter of hours, and that's where the money comes from. So will it be manipulated? Can they keep the price down? Can they control it? Up to a certain point. Now, if other players come into the space, think Hong Kong, think sovereigns, think pension funds, think players buying it directly, think miners not selling, then they'll be forced to actually start buying it aggressively. And we wait for that time. And that supply crunch will hit. I don't know if it's going to be in 3 months or a year or 3 years, but somewhere it's going to happen and it's going to be fun to watch. Now, next question from William D. Imagine you want to retire and your Tesla and Bitcoin bags each have $1 million in them. How much would you take off the table and where would you put the money to protect it? And would retirement affect how you would trade with the money that you leave at risk? Now, would you switch to shorter term plays that didn't require years to develop or use specific option strategies that would be most appropriate for retirement? Basically, great question. And what I've been doing probably for a very long time is playing with options. But let's just talk, the same thing will apply for Bitcoin, but let's just talk about Tesla because it's the exact same thing. So imagine you have $1 million in Tesla shares. Today, that would be 6,250 shares, and that would equate to about 62 contracts. So on spikes, I would sell covered calls, a little bit out of the money, and oftentimes on a spike, you can get easily $100 in premium if you sell 3 to 4 months out. And that could bring you in 62 times 100, the number of shares per contract, times $100 for the actual contract you sell. So you could easily bring in $620,000 once a year to cover living expenses. And why do I say once a year? Because if you are in a retirement situation, you want to wait for those very, very pico moments. You don't want to, I call it jumping in front of a freight train. You don't want to sell a call against something that is about to spike up even further. You wait for those opportune moments. And I'll show you how I do that in the past. One other thing I forgot to mention is I believe in holding an 80% HODL bag and a 20% trading bag for speculation and extra alpha, but nothing touches the 80% bag, and things like Tesla are a keeper. So first of all, this is the 4-year chart on the 3-day time frame, and you can see it's been a volatile beast. But remember as well, volatility is what we like because we get to do hedges and spikes. Like I distinctly remember hedging. There was it was a post earnings call. I think Tesla was about $800. I sold calls right before the market closed, and this is before I had a YouTube channel. And then there was a guy I think called Meet Kevin who was actually buying the shares, and I thought that's interesting. I'm going short and he's going long. Anyway, the rest is history because you can see what happened. The price came down. And the orange is the downward trend. And that's about to reverse right now, ladies and gentlemen. If you come back a week later on this 3-day chart, that will be blue again. And we go up from here. But the beauty of this, when you zoom out, these are the times for extraordinary stacking, when we get really, really low. And then when we get really, really high, we keep our bag, but we sell covered calls. So this is the chart now with what I call mean reversion overlaid on top of the actual price chart. The red and the green bands is when you go over. Basically, the asset is very much overbought. If you can see the little red dots, that's where I would sell a call on the 3-day. If I was retired and dependent on this bag, I would not sell the bag, but I would hedge it by selling calls at different positions when these signals fire. And you can see here we got 3 beautiful signals multiple standard deviations away from the mean. And that means you sell a call, and you can actually get a bit greedy. You can sell an at-the-money call for some of these as well. And then you let them expire, because that's what they do over time. And you collect that money. And if you're doing that for $1 million worth of Tesla, you could be collecting 620 grand just from your Tesla bag alone for a year. Sometimes you can do it twice a year. It depends on the situation. But that's what I would recommend for this. And the opposite is also true. When the mean reversion goes to the downside, when you get these big green dots here at the bottom, that means it's very, very oversold, which means you buy. So the more standard deviations away as well from the mean, the higher your probability of success. And in fact, I don't know if I can quite read it here, but this mean reversion table has a win rate of 100%. So if you dial it into something very conservative, like a 3-day chart, not necessarily the 4-hour or the 12-hour or the daily, but 3 days, if you're retired, that's what I would do. Now, the old adage as well, you hold on to winners and you use covered calls to generate cash. That is my playbook, and it is the most important thing as well. You cut your losers, hold on to the winners, and both are very, very important. Do not hang on to things and hope that they will rebound and return, because they don't in most cases. And that's key. There's one other factor too that I did add here as well. A little bit on Tesla, just why it is a keeper. And again, it's the beauty of the markets and why I believe it's a must hold for investors. And yes, we've been through a brutal time. I'm well aware of that. Technically, it's of the last 3 years, it's been down, but it's also a gift because the market misunderstands and undervalues Tesla. That is what we love. That's why we were able to get in early and get in hard. And even like my Tesla position, I've been in Tesla since 2017. It's more than quintupled over the last 15 or 16 months. And I never thought I'd have the opportunity to do that again. And I did. So I'm grateful because I know where it's going. And let me tell you why it's going up. It is an AI and robotics company. And that is what the future is all about right now. It is an FSD technology company, and it's progressing very rapidly. They're releasing new FSD versions every 8 days, which is unheard of. They have an Optimus humanoid robot that will start working in the factory this year doing productive labor. That will disrupt the $44 trillion labor market. And their energy business has infinite demand. It has higher profit margins, and growth rate is through the roof. They can't make these things fast enough because AI needs a ton of energy and they need it 24/7. And therefore, these puppies, these megabacks, will be demanded forever. And they are the leader in the space. And it's not a car company. So that's why it's a gift. Next question is from Reality Expectations. I like that name. I'm an owner of several Tesla calls out to January 2026. Some positions are now pretty far out of the money. Would you sell these positions and buy back in at lower prices, or continue to hold them as they have plenty of time to rebound? So that's a very, very good question. And you can see here, we're going to look at a chart again. And I'll tell you what I've done is I've overlaid the LILO model, the layer in, layer out model, with the ATR model to get a feel for exactly where we are going and where I would sell the calls and layer in at a lower level. First of all, there is stunning confluence between these two models, and they're built off different technologies, which is super interesting. But I'll give it to you straight. So $176 is a lock, $210 definitely a lock by 2026. And in the medium term, 250 is possible, maybe even sometime this year, maybe even 300. We don't know. It depends on exactly what they deliver and how Wall Street appreciates it and what happens with the comp plan, all that other stuff. So it's a very, very complex calculus behind this. But beyond that, if you have a call with a strike above 250, I would say layer down. Very, very important. 2026, though, is a long way away. And a lot will change. 2025 will be a very, very special year for the company. And we might even be able to see the fruits of FSD sales where they're rolling out now in Europe and trying to get permission to do it in China. And remember, they're selling nearly over twice the number of cars in China than they are here in the US, because the US is slow to adopt EVs. China is not. I think US penetration is 8%. China is 25%. So think about that. Every new car in China will be another $100. Pure profit to the bottom line, which is madness. Next question is from Hubin. I am not lucky enough to find your YouTube channel earlier. When I found you, Solana is already 150. Is it still a good buy? Good time to buy Solana? I have $100,000 in cash. What would you recommend to buy? Looking for a 5 to 10 times grow in asset account in the next bull market. But everything has gone up so much. So there's a couple of things here, and I'm not going to sugarcoat it, but I'm going to give you some perspective. It's very important when investing to have very realistic expectations. If you have unrealistic expectations, it can drive bad behavior, which can bring about failure and loss of money. So a little image of where we are right now. The start of the bull began in late 2023. The end of the bull could finish in 2025. So we are exactly halfway in between. And there's some very interesting math that comes along with this. If you take something like Solana, it's gone up 19x already. Is it going to go up another 10x? Let me explain why that is very unlikely. And that's why I want to set some realistic expectations. And that's also why I always say get in early, get in hard, because the importance of running into those burning buildings is, like, I bought Tesla, I think, last week at 141. And that paid off a lot. And I was layering down all the way, but every step down, you go in harder. And that is also super simple concept, but difficult for some to embrace because fear and emotions overtake logic. Now let's talk about where we are. So if you invested $5,000 in Solana, that's gone up to $150,000 right now. Again, that 19x. And it's hard to believe that these gains are still possible, but yes, they were, but you had to be brave. Now the question is, are you going to 10x that again? That would mean the initial $5,000 investment would become $1 million, and that is unlikely, very unlikely. Or even the $5,000 investment going to $500,000, which is that 100x, is also very unlikely. So you always have to take into account where we came from, here, where we are, and where we are going. Now, this does not stop me from buying Solana, but at the same time, the upside from here, the majority of the gains have already been had. All right, there are talk from Van Eck and others that could go to $3,200, but that is ways into the future, maybe 2030. Not now. Somewhere, I do believe Solana could easily hit 300 to 360, maybe higher, but another 5 to 10x from here is not possible. But again, I still do believe things like MicroStrategy, which I bought recently, CleanSpark I bought recently, Tesla I bought recently, Solana I bought recently, Bitcoin I bought recently. There's still money to be had, but nothing like buying Bitcoin at 16,000 or Solana at 8,000 or CleanSpark at $2.50 or MicroStrategy at 190. The big gains are already over. And just remember, when you are investing, it's very important to know where you are in this journey. And a huge part of my focus right now is focusing on the end and how we entered pretty perfectly. We need to focus very much on how we get out of this and what we rotate into and how we hedge. That's been my entire focus now for the last month and will continue to be so for the next year. So timing is everything in the markets, but we have some ways to go, but don't expect 10x from here. Unless, of course, you're in a very small, low market cap asset that is misunderstood. That is kind of the key. So next question. This is from two people, both Stan and Sam's uncle. One alt that I've not heard or seen you analyze is HNT. As Anatoly recently stated, this is the one use case for crypto and decentralization that his parents understands. Solana phones and a decentralized mobile network seem like a huge disruptor. And yes, it is. And in full disclosure, I do own HNT. I haven't done a Sol alt video on it because I don't know why. I think because I probably owned it before I even thought of the Sol alt concept. in fairness, and a couple of reasons why I like it. First of all, before I touch any asset, I make sure they have a good compendium score. This looks at how it's structured and who is going to win or lose, and literally from all the Internet of Things plays, which includes other kind of telco type plays as well, decentralized mobile communications, this one is by far the best. The crypto compendium score is amazing. It's a very well structured project and has very good mechanisms in it as well. In addition, why I like it, first of all, again, apart from the compendium score just top notch, the use case is also top notch. Decentralized wireless network is a no-brainer to me. They now have programs for like $5. And as times get harder into the future, there'll be a lot of people taking advantage of that to save money. Instead of paying their telco provider $50 a month, now they can pay $5. Also, the utility HNT is used to pay for network services, which is also burned to create data credits, which are used to pay for transactions on the network. And this mechanism helps the value of HNT as well. There's governance in there. There's integration. They have partnerships with major carriers like T-Mobile as well. So if you're on a dead spot without a network, you can jump on the T-Mobile network. It means you've got complete coverage, strong community, and the investment potential is there. If we look at the chart of where we are, again, I left the mean reversion on. That's the green dot. It was extremely oversold just recently, a few hours ago, yesterday, I think. And the trend has turned, and we had our first buy signal since December 2023. So, and the all-time high for the year so far is about $11. So could it go double from $5.50, $5.40 to $11? The answer is yes. We just need the altcoins to return. We need to see some strength in Solana, and all these sols will go back up as well. So yes, I like it. It's one of the few I like, and we'll see if we do a sol alt video. I only want to do 12. I think I've done 12, and that was the limit. But yeah, this is a good one for sure. Next question is Brumby. Oh, I forgot to mention as well, altcoins have been smashed of late. This one's down 50% off the high, but you can take that pretty much all across the board. They're all down 50% off the high. Some are even down even a lot more. So these are very risky assets. You go into a tiny position, and then you make sure you exit out at the right time as well as we go forward. Next question is from Brumby. Patreon member for 2 years now, and my only regret is I didn't join sooner. Well, thank you for being here. I was forced to buy a new car a year back as I was laid off and lost access to my company car. The question is that I have an outstanding car loan of $35,000, and I have the cash to repay it now. Shall I repay it or buy Tesla shares and keep paying my monthly repayments, which I've been accumulating since I joined Patreon? So that's super interesting question. And in full disclosure, I have a 7-year car loan on my Tesla X. The rate is at 2.9%. I could pay it off in a heartbeat, but no, 2.9% is free money. So I keep it. And I love debt, but make sure you always make your payments and everything else. And if somebody offered me a big loan at 2.9% for 7 years or 10 years or whatever, I would grab it with both hands, okay? I don't know what your rate is, but I will tell you a couple of things of how I would approach this. First of all, it's ultimately your decision. I don't give financial advice, but there are aspects to this. Imagine the interest rate you have is 6% or 7% for the car loan. It may even be less. It may even be 5%. The question is, if you pay it off, you're giving up your cash that has an opportunity cost. If you invest in Tesla shares could easily be $300 in 2 years. Whereas if you're paying only 5 or 6% on your car loan, it's a no-brainer to invest in the market and keep making your minimum payments. However, there's other things to be concerned about. One is debt management. Paying off debt sometimes gives people peace of mind. They like to be debt-free, and it helps them with their overall financial health. It can also free up money in monthly cash flow that can go towards other things. So that's one thing to consider. And the other thing is risk. all investing is risky. Investing is a blood sport. Investing in the stocks such as Tesla carries risk. Everything can go to zero. So it's important you are aware of that. I don't think that's the case with this stock, and that's why I keep buying. The harder it goes down, the deeper it goes down, but it looks like it's bottomed at that $140 level, which we thought last week anyway. Now, the question is as well, what else? You could consider some diversification, not just Tesla, maybe some crypto as well. And investing in something like Bitcoin or Tesla as a combo is a no-brainer right now for the next 2 years. But then when the bull run gets toppy, sell something, then pay off. But now over the next, say, 9 months to a year and a half, they are key times to be invested, I do believe as well. And again, I have a car loan, I could pay it off in a heartbeat, but I don't like to. I like the debt. Free money. Next question is from Berkeley Yerkley. I hope I got that right. With all the US crackdown on crypto privacy, what ways do you recommend funding a completely anonymous wallet without doxing yourself? So I'm not going to tell you how to do it. We've got older videos that do it, but this has been a very interesting week where governments are clamping down on software companies that do things like help non-KYC wallets, etc. A lot of people in the crypto space were up in arms. And after everything we've seen since 2020, some people argue that software is freedom of speech, but when they curtail that, that's an issue. So one of the things I think we all need to prepare for, because we've seen the breadcrumbs of what is possible in different authoritarian regimes around the world, and I don't know where you are exactly, maybe the US, but I think we should always, I forgot it yesterday, expect the best but prepare for the worst. Words to that effect. So first of all, if you do have Bitcoin, then this is more of a general thing, not exactly how to do it, kind of how to dictator-proof your money, keep quiet about your money, use multi-sig wallets, have multiple wallets, leverage the Lightning Network for cheap transactions. In some ways as well, they can also be somewhat anonymous, and there's ways to do that as well. You can also use Bitcoin to get money into areas with banking sanctions and blockades. Also, keep your Bitcoin holdings secure with a seed phrase you can memorize, and take advantage of non-KYC methods while you can, including things like ATMs, but sometimes the ATMs can have high fees, so be careful of that too. And we have done older videos on how to do stuff, and there's a lot of stuff on the internet too as to how you can build non-KYC positions. It's still very, very possible. You got to jump through a few steps, but I think it's important for everybody to be prepared for the future, because we've seen kind of what can happen. And this week was interesting because when you look at this dictator-proofing, you'll see a lot of weird memes and tweets out there. It's like, apologies if this is mean, but look, this one has a self-custody wallet. There will be people that might rat people out for owning Bitcoin. Therefore, you need to be quiet. Second of all, the law that passed in Oklahoma was a breaking bill. Hopefully it'll be signed by the governor of Oklahoma, but that is the right to self-custody, the right to mine Bitcoin, the right to run a full node, and the right to buy, sell, trade digital assets. That will be very, very important for the future. And the stuff we saw over the last couple of days, couple of weeks, have been kind of scary to say the least, but I'm hoping it's just a phase that will disappear. And when the government realizes, yeah, software is freedom of speech, and the right to own assets is a human right. It should not be controlled or curtailed or whatever else, It goes back to the days when people used to hide gold because they were afraid of what could happen. So it's all about freedoms. Hopefully, when people vote for their regimes, that will be kind of on the ballot somewhat to some extent. Next question. And I'm not saying too much, but it's a prickly area. All I say is be careful out there. The world is changing. Ryan H0890 recently saw an article where the New York Stock Exchange is going to getting a feel of the 24/7 trading model like crypto. Do you see this happening in the next 3 to 5 years? I think this would be a big win for retail investors. But do you see any disadvantages if it were to happen? This is another great question. So first of all, the writing is on the wall for markets. Everything has to be 24/7. For years I've been joking. You can tell your grandchildren the stock market used to only be open 6.5 hours a day and closed at the weekends, and it's bonkers. But anyway, it is coming and it will bring about some change. However, it is likely to think about it for a long time. And a hybrid model will exist first. And we already have hybrids like Robinhood, etc. I wrote Rob, it should be Robinhood. So there are already examples, and these are putting pressure on the traditional markets. But the way the traditional markets work, they are not geared for this to happen. It may take, as you say, another 3 to 5 years. So you're pretty right on the time frame. But these things are putting pressure on the traditional markets. Now, Robinhood has after hours trading, Webull has it, Interactive Brokers has it, TD Ameritrade has it as well with Blue Ocean Technology, Schwab has it, and Fidelity for some accounts as well. So I think it's pre-market stuff. So a lot of options are out there already, but they kind of have market makers that enable it. It's not a whole like New York Stock Exchange to make it work. Now there are pros and cons getting into this, and even trading crypto can be very stressful because it's 24/7. Like, who here has to get up during the night to check the markets? I think it's quite a lot of us. But there are pros of this. First of all, if we have 24/7 markets, it'll give better access for those who are around the world in different time zones. You could be living on the other side of the world in Malaysia, and it's difficult to trade the US markets because of the time zones. This will open up better access. Also, a very important one here, it will eliminate the institutional investor advantage in after-hours trading. Okay, you see sometimes there will be a surprise earnings report after hours, and then the price goes to the moon, but you can't get access. That is unfair. But you know the insiders are the market makers, etc. The institutional investors, they can. It'll also capitalize on global market movements if things happen around the world, like a shock event. There was a situation a week ago where it did rattle the markets, but the only markets that got rattled were crypto because the rest were closed. And by the time the traditional markets opened, it was a nothing burger. So that's the other key thing that will help us react to news events outside the traditional trading hours. And there's potential for more market participation, more volume, more action. So net, it is a very good thing. However, on the con side, sometimes, it is good to have a natural break, and it can actually reduce the market volatility. It can actually exhaust and stress people out. If the markets are open 24/7 and people want to trade them 24/7, it can burn you out, believe me. And crypto has done that to many people too. And there will be a need for regulatory changes, and you know how fast the government works, so it could take years and years, and it will take years and years. And it will have huge impact on how institutional investors work, especially their algos. And we'll see what happens. But I think one of the great things that did happen in the old days was the tokenization of equities and then trading them on the blockchain. I'm hoping that comes back, but with legitimate players. I think that would be very interesting. And then the rest of the world, the traditional markets, can just go away and just move everything to the blockchain. And that's, I think, what Larry Fink sees as well at BlackRock. So final piece, and I'll open up some live questions. Favorite part of the week. This is Toto, baby elephant, who was orphaned at a young age, and Toto was found by other ex-orphan elephants and was led to help. So we help the Shedrick Wildlife Trust for little baby Toto. So thank you all for making this possible. DCA is on tomorrow morning, CTO Larson's channel, 7:30 a.m. Pacific, with Mando. So Mando is our new team member who, you guys love his breadth of knowledge. He adds a great color and perspective to what we do. And that's it. Now let me take some live questions. And thank you as well to the mods in the chat. I better drink some tea. Bitcoin's at 63,800 as we speak live. Now, let me pop up this piece. First question, and thank you everybody for coming out as well. And a shout out to Doc Simple. Thank you for your support. Doc Simple, I'm 45, hope to retire in 5 to 7 years. You got an okay bag of Tesla and MicroStrategy and Sol, considering HELOC home, 3/4 paid off to buy Tesla and MicroStrategy, adds a manageable 1,200 to mortgage. Advice, long-time follower, introduced by Doc Intern. Doc Intern rocks. All the docs here. We've got a ton of medical professionals in the space. So, first of all, borrowing to speculate is always very risky. The time to do it was at the bottom of the market. But that being said, if you can get a HELOC, which is a home equity line of credit where you borrow a second mortgage against your home, and the interest on it is $1,200, and I assume you can handle that carefully as long as you're not putting yourself in any jeopardy. I would definitely think about that. But in terms of Tesla and MicroStrategy, they're both very, very risky. But at these levels right now, I think the risk reward is definitely there. As long as you have that time frame, like a 5 to 7 year time frame, and you could easily manage the $1,200 a month, I think it's well worth doing. It's kind of like the complete reverse of paying off the car loan. Apply that doctrine here. So, Doc Simple, hope that helps. But again, borrowing to speculate is very dangerous. But leveraging your assets in a very safe way, like a home equity line of credit, is often a good thing to do. So, not financial advice. Talk to your financial advisor. Let me see. And think of me. Like, I've got a 7-year car loan at 2.9%. And I'm not paying it off because I'd rather have my money work in the markets. But that's just me. One Brighton, do you think the Sol has bottomed out or possibly more downside to go? I think Solana bottomed. I got into a perp on Sol. I think the layer was around 130 or so. Let me check. I have it. Yeah, it was 129, 128. Is that pretty close? It's 143 right now. I think that 130 level is a very, very solid support level. We could wick down there. In fact, we wicked down to 135 a few hours ago. Let me check. No, yesterday, I think it was. But yeah, we're very, very close to the bottom. And we were at 210. So going from 130, 140 back to 210 is a very good gain, and we're going to go higher from there. It's just the whole crypto market has hit a bit of a pause with the Bitcoin halving, and once Bitcoin comes back to life, you're going to see all the alts pump, and they will pump a lot harder than Bitcoin does, and Bitcoin will come back to life, as will MicroStrategy. Oh, by the way, watch out for MicroStrategy earnings next week. That'll be a fun one. Brock, Tesla or Solana? I have a good bag of Tesla, but I need to work on my goal of 100 shares of Tesla. So I always like to, I had my allocations made over a year and a half ago in the bear. The way in which things like CleanSpark and Solana and MicroStrategy ran, they completely destroyed my allocations. Now I'm focusing on building, like I bought big into Tesla, very big when it hit 141. But I was waiting for it to hit 140, but the trend kept on going down. So I just waited, and then pounced. But I have been nibbling on other things too, like MicroStrategy, a little bit of Bitcoin. Bought Bitcoin for the first time since 42K, which I thought, but that was more of a strategic plan of safety because of all the uncertainty, going back to my whole money market thesis for Bitcoin. So I think, Brock, if you have time, you will probably get more run for your money this year out of Solana than you will for Tesla. And then late this year, rotate out of Solana into Tesla if you can do it tax-free. If you have taxes to consider, do the math on that, because if you're paying short-term capital gains, it'll murder you in the United States. The T, we are all going to make it. Yes, we are. And these weak market times, actually, you have to start looking at them as a gift. So yes, Mr. Shake, are you still bullish on Flux, Fluxbeam, Nosana, or SolChat? And are you planning to hold for a year? Yeah, all my Sol alts I hold. My plan is to hold for a year. My plan is never to dump on anybody unless the fundamentals radically change. Like if the wheels are going to come off a protocol, I'm out. But I do a lot of work on these things. I haven't added to any, with the exception of one. And I'm looking at them all. I'm waiting for, it's all related. So waiting for Bitcoin to get stable, Solana to get stable. Once those two are stable, then the Solana alts will have bottomed, and then you jump in and ride them up. You just gotta wait for that trend to turn, and it did happen with that Helium one today as well, yesterday. So some of them are super interesting. And I also have to look at my allocations because I like things to be, I don't like to hold too many assets, but I like to have solid weightings of each of my high conviction bets. And Flux, Nos, SolChat are there. There's a couple that I am underweight on that I want to get more of. So you'll see my posts when I make a move, and I'll also share what I'm looking at. Doc Intern. What are your thoughts on AI GPU aggregator IONET, which launches token soon? Nosana killer or complementary? Already have hundreds and thousands of GPUs signed up on the platform. Currently only available pre-market on Whales Market. I did research into IONET and I did not like it. I saw a couple of things that were like red flags, and I decided no. It's also heavily pumped. I like to get into things before they've been pumped. And I can't remember the exact red flags, but there was a few things that just left a bad taste in my mouth. So I'm sticking with Nosana right now. It is not a Nosana killer. And in fact, Render is planning to use Nosana Compute as well. So that'll make them pretty safe. And the relative market caps are also very good. IONET is already, I think, has a market cap over $1 billion if you look at the price on Whales Market. Charles Kincannon, thoughts on the debt bubble and when? We are already in a massive debt bubble. The world is in a debt bubble. We are beyond the point of no return. It'll be money printing forever. And things are going to get kind of crazy. I don't want to spread any fear, but the next 3 to 6 years, we're going to see a lot of changes. We're going to see massive money printing. You're going to see some places in the world trying to reset. You're going to see people chasing hard assets. You're going to see the AI revolution impact everything. That's also going to reduce the tax revenue for countries, which means their deficits will explode, which means they have to print more money, which means it is gnarly. I mean, we're not even in a war right now, Charles, and we are at deficit levels. Sorry, I heard that word. We are at deficit levels, like we are in a war, which is kind of scary. Piper, thank you so much up there in Canada for coming, and thank you as well for your super sticker. Brock, Crypto Katana, Glenjo, Signal 103, Andy, Jeff Hammer, B-Man 63, Adam Q, and Piper again. I'm about to sneeze. So, I don't know what's wrong with me. Must be spring allergies. I don't even get allergies. Anyway, thank you all for coming. Hope you enjoyed the show. Sorry if I touched on some things that were a little bit scary, but again, prepare for the worst, and then we'll have a great time, and the markets will be good to us. Thanks, everybody. Bye-bye.